you're unsure about it, you're going to constantly go back and forth, and you're going to end up costing yourself time, money, headaches, whatever it might be. So here's an execution strategy. I'm going to mark off my buy zone, and I'm going to show you guys two different options. Okay, the first option is going to be just entering one position and letting the fucking thing ride. But entering one position with proper risk. So we tell people enter at a specific zone that we teach in the class, and then let the trade ride. And they're like, oh, but the drawdown is so crazy, and the best piece of fucking trading advice I got, and I want you guys to think about this week. Anytime you're struggling with trading, ask yourself, if I was risking $1 or like 30 cents on this trade, would I give a fuck? The answer is probably no. And then you start to look back and realize it is the money. People will be like, no, I think it's the psychology. No, I think I need to learn more about fundamentals. No, I don't think it's over leveraging. I don't over leverage. And I ask them, if you were risking 10 cents on this fucking trade, would you have been watching it all day and wasted half your day? The answer is no. It always comes back to proper management. So impulse control is, I mean, like, risk management kind of, people think about it as discipline, like the same muscle that you use to do that chore that you don't want to do. And then eventually it's like a habit or whatever it might be. Risk management at first is like avoiding the sweets if you're on a diet. You have to use willpower, which is active energy, in order to not do the fucking bad thing. And we teach a lot of tricks, over in the coaching side on how to avoid those behaviors, make the good behaviors easy, make the bad behaviors hard. You kicked out all the sweets out of your house and you have to drive all the way to the fucking store, go into the aisles like a piece of shit, go to the self-checkout because you don't want to even look the cashier in the face to go get those sweets. You're not going to do it. And you got the celeries right next to your bed. You can snack on them, midnight snack, whatever it might be. Make the good habits easy, make the bad habits hard. Okay? So the reason I'm going to show this quick example before we get started on the weekly outlook, and happy Memorial Day weekend to everybody in the States. But I'm going to show you guys two different execution methods and why it's important to have a disciplined execution system. And this is what we teach in our class. So I'm here on FX Replay, the best backtesting platform on God's green earth. We might have missed the entry, but let's see if we get a re-entry. Okay, so option 1 is enter one position, let it ride. Option 2 is scale in. Let's see the difference here. I'm going to have to reduce the candles 5 minutes. I'm going to play some music while this plays out. I'll explain after. One of these things, they just they take the trap like joke, but then the trap like man type of. Hickily bitches, hickily bitches. I'm on to move like on speed race. So far, they don't believe it. Hickily bitches. I'm on move like on speed race. So fast, good to believe it. Okay, so this is option 1. I'm just going to enter one position and just let this thing ride. Let's do one contract. Actually, let's do 3 contracts. The account size, I believe, for the simulation is 10,000. So I hope that this thing is counting micro contracts. Stop loss is set at our fib level every single time. Okay, now let's see how much drawdown we actually get into before this thing goes our way. Right now, we're negative $33. Is there a trading panel here? Okay, perfect. Can I collapse this thing? Okay. There's no way to collapse this, really? Anyways, okay, so the starting balance is $10,000. The unrealized P&L is 205. So we're going to actually track those key metrics here. So now we're in profit. Let's boost this up to 15 minutes. We're in profits. TP1 gets hit. A little bit of rejection here. And actually, just for reference, we're going to mark off two things. Let's go to an empty part of the chart here. This is really important. So I'm actually going to do the work that most people should be doing for themselves, which is this comparative analysis. But that's what we're here for. Trade one. 3 contracts. And here are the things that we're measuring. Max drawdown, which is how much drawdown did we have to endure? Duration. And total profit. All right, let's keep the show rolling. I'm gonna slow this down, make sure we track if we go into any more drawdown. Okay, negative $100, I saw that. Negative 144, 157, 19, 271. Oh, okay, stop it. All right, so we'll do total profit in dollars. And then we'll do total profit in percentages. All right, let's look at the duration. So this trade got entered the 3rd, let's call it the 4th at midnight. And the 6th at around midnight. So 48 hours, 50 hours. Okay, so the most drawdown that we experienced during this trade took 2 days. And obviously we can kind of extrapolate this out to realize that the real move basically was 1 day. So if you're trading CFD contracts, you can actually hold the trade through the market closures, through the weekends. And these sort of, swing trades become possible. Because I know that we teach in the class specific sessions, but if the market is at these zones, okay, once you identify the model, you have your range. I don't care if it's a Sunday. I don't care if it's a Saturday and the market's closed. If it's at the zone, that is the entry. Now, you can't expect movement. You can't expect volume until the high volume sessions like New York. So if you do enter during Tokyo or on a Sunday or during a low volume session, that's acceptable. But obviously, you have to set your expectations about when the full move is going to be complete. Okay. Otherwise, you're just going to be very impatient and be staring at the charts way too long. So let's do another example here. Let's find the next trade, which is probably going to be right here. Boom. And this is the exact markup that is playing out on NASDAQ right now. So this exercise is actually helping to build some muscle memory for what's to come this week. All right, let's go ahead and close out this trade. Beautiful. 27%. Now the next order, I'm going to scale in, which means I'm going to enter the same amount of risk, try to keep it under $300, $400, and try to go for a similar return, 2,700. But instead of entering one order, kind of like a enter and pray kind of strategy, I'm going to scale into this thing. So I can spread out my risk and dollar cost average into the trade. Let's do this. Okay. I'm going to let the music play. I'm going to trade the simulator thing, and then I'll explain it right after. Well, that was quicker than I thought. Okay, so first order goes in. That's the sell order. Instead of putting three contracts, I'll only put one. And then if the market comes up for a double top or comes up above that zone, then I'll be able to enter an even more attractive order. Or more attractive entry. You guys get what I mean? Okay, so far, drawdown or profit 58 bucks. Now we're in drawdown. I want to wait for a little bit more drawdown, a little bit more. Oh, I missed it. That was the candle. I clicked way too fast. Oh, it gave us a second try. Now, look, most people, especially during this week, when you guys start to see these formations, and I'm mostly talking to the Chart Addicts members here. Okay. So the first rejection, you made some money, so you were in profits, and then the market comes back, and now you're in drawdown. Now, you guys saw how upset I was. I missed the double top. Now the market's giving me another chance. So I can either take it or I can sit here and like get scared. Oh, but it's filling the wick and it's the candles and this and that. Is the market still at a high? Has the market still rejected and closed below? If all of your conditions are still met, you can't look at a candle by candle analysis and scare yourself out of a trade. Candlesticks are the biggest trap in all of trading until it closes. Once it closes and it prints, they show their hand. But until then, they could be bluffing at the table. So use structure, use pattern recognition, use tried and tested pieces of pattern structures, things that happen all the time. Look at the models. And instead of trying to do a copy and paste of like an exact replica of how it's supposed to look in a textbook or whatever, be adaptable. But look at those key rules and conditions. The candlestick did close after it printed below the sell zone. So is the trade still valid? The answer is yes. Am I going to enter three contracts right here? Boom, just did. Okay. Now, let's look at the difference here. I really hope this thing plays out. Otherwise, this is going to be a pretty horrible example. Oof. This might just be a loser. Okay. Massive losing trade. Where's the data? Oh, close positions. Oof. Okay, so the first trade was a profit of 3,000. These other trades total were about 2,800-ish. So still in profits, even though I just lost kind of like a pretty stacked trade. Now, pretty shit example, if I'll be honest. Like, I really wish that was one of the ones that played out, just to see a clear difference. I guess what we'll have to do is on, what is it, Wednesday? On Wednesday's webinar, we'll do the same thing, and I'll just have them side by side and take the exact same trade with two separate entry protocols, and you guys can see the risk and reward difference and the duration in drawdown. Because look, the duration of the trade is one thing. How long did it take me to make money? But a second component of this is how much time did I spend in drawdown? Duration and drawdown is just as key. A lot of traders psych themselves out during a consolidation. So if the longer the duration, the more likely that the trader fucks up. Now, duration risk really is defined as the longer you're in a trade, the more likely it is that the market will do something unexpected, like Trump tweeting from the bathroom. Anything can happen. But in Forex trading, especially with CFDs and high margin, what I've started to notice is the duration risk really is the longer that a trader is in the trade, the more likely they are to self-sabotage. Huh? And that's why I have to commend a lot of my friends who are swing traders. QB Stu, honorable mention. Because, dude, it is a fucking journey to hold a swing trade. Week after week, you're up $1 million. Now you're down 500, and it is just such a fucking roller coaster. Now, if you are like me, you have a personality that's not really fit for long-term holds. You really just want to have the result as soon as possible. Dude, when I took an exam, I want to get the result today. I want to just let me do it on the computer. Give me the result. I don't want to wait 3 days and see if I failed and passed and all this stuff. But that's my personality. Now, because of the self-awareness, I'm able to build a strategy that is very specific to the way that I operate. So hopefully you guys can do the same. So this model works on all time frames, whether it's small or large. If it's larger time frame, you're going to have to hold. That obviously works better for CFDs and favors CFD traders. If you're like myself and you want to be in and out, futures was a blessing in disguise because now we don't have a choice. There's expiry on all of the contracts, and so you have to be out by session close or by the market closure on weekends. So it's very beneficial. Walk away with the money. Okay, anyways, welcome back, everybody. Market outlook for the week. If you guys haven't already subscribed to our newsletter where we drop daily market news, we're going to give you guys schedules of all the biggest events related to trading. Click the link in the description. Take 2 seconds right now. Put your name, email, and you guys will get that morning report every single day. Without further ado, let's look at some of the data releases dropping this week. We'll look at some of the trades that I just outlined for the Chart Addicts members. Don't worry. I'm not going to give them everything. We outlined for technically 5 trades. I'll show them 1 or 2. Maybe one. Actually, let me know if you guys are on Zoom. Should I show them the buys, the sells? Like, which one is a good sort of like gimme? Because I feel like the sell is more risky after what we just saw with FX replay. Like that 88.6 sell, trade number 2 on that diagram I sent. But members, if you guys are on Zoom, if there was one trade I should show free on YouTube, which one would it be? All right, so Fed Chair Powell speaks on a Sunday. What? Princeton University. Baccalaureate ceremony? What the fuck is that word? All right, yeah, too many vowels back to back. Jail. No. Volatility experience. Okay, don't care. Let's see what we have this week. Monday doesn't look like there's any action. Tuesday looks pretty full. So, President Kashkari speaking at the Monetary Policy Challenges and Uncertain Economy at the Bank of Japan Institute for Monetary Policy of Economic Studies Conference. Lord have mercy. Dude, how expensive is your sign? If you guys ever owned a restaurant or ever owned a store, you guys know neon signs are expensive. You pay for the letter. FX Summit, we pay for the letter, every letter. Dude, the Bank of Japan Institute for Monetary Policy and Economic Studies. Dude, tell me that your job is completely a made-up title and you guys just all stand around in a circle jerk doing fucking nothing without telling me that you're completely useless. You stand around in a circle jerk and you guys do nothing. Bank of Japan Institute for Monetary Policy and Economic Study, and their economy's failing. You got 55 words in the goddamn name and no money in the bank. Hallelujah. I'm glad we solved the problem. Core durable goods orders on a monthly basis dropping on Tuesday, 8:30 a.m. HPI, don't care. S&P index, couldn't care less. They're bought off, complete frauds, scam. Watch The Big Short. CB consumer confidence dropping on Tuesday. Scam survey, not a big enough sample size, jail. FOMC member Williams is speaking at, dude, Jesus, what is happening with Japan? Dude, you know what? This is pissing me off. This fucking pissed me off. We're shitting on Japan. I'm sorry. We're doing it. We're doing it. All right. The fuck we out here doing all of these Fed presidents are out here. First off, focus on America for fuck's sake. We got to decide whether we're going to drop rates this year. It's going to be two bullshit cuts that are going to be kind of throwing a bone to the market, or are we really doing this thing? We really fucking cutting these rates. Am I getting a house next year or not? All right. We got to know. I'm small fish. There's big fish waiting for the same answer as the Fed going to drop rates. They're out here doing policy institute shit for Japan. Japan is on fire. Bro, it's a sinking ship. I'll make you guys a promise right now on this stream. Mashallah, you guys didn't learn a goddamn thing from any of the streams I've ever done. Learn one thing. If there's a currency collapse and fiat currencies become so hyperinflated that their value is no longer comparable to real money, it's just like, it's never, the cash is just worthless. It's just like a thing. It's like a fucking Chuck E. Cheese tokens at that point, which is coming next 5 to 7 years. Japan's the first one out the window. Euro out the window. GBP is still up in the air. Brexit, they were in the right direction. Now they pussied out. Keir Starmer, cut. Canada, they could survive. They got Mark Carney as their prime minister now, former head of the European Central Bank. He knows currency manipulation. He can keep the thing afloat. But Japan is the first one out the window. They have made it very clear, and I've written articles about this since 2019 on the Chart Addicts website. You guys can go back and backdate this. The receipts are on the website. Analysis tab. Click on it. 2019. Japan, trash. Monopoly money. Why? Because the government was broke. Okay, so what the government does is if you don't have enough money coming in from tax revenue, you can issue bonds, which is basically these made up things that says that you come loan us money. Now, all of these investors come and loan the government money and they get paid back with a percentage. That's what a bond is, a treasury. So a government treasury. The government was so broke, they had a choice of either print the shit out of their currency, devalue their currency, throw it out the window, and pump that money into the piggy bank of the country to save the government, to save the actual operations of the country, or try to save the currency. They couldn't do both. And so Japan sacrificed their currency by printing the shit out of it and then funding their government in order to save their bond market. So many people had lent Japan money and they were expecting their money back. And now they have their hands out. Where's my money? Japan says, we don't have it. We're broke. All of our young people don't work. They're not having kids. Not having sex. No kids. It's a mess. So they're like, but I still need my money back that I lent you, Japan. And the Bank of Japan prints yen, gives the money back to folks, and then the currency just continues to drop, drop, drop. Put a 1 in the chat if this makes sense, this cycle of devaluing fiat currencies. This happens everywhere. The problem with Bidenomics and printing $20 trillion is they just did the same shit to us. Now, America was invincible from this, but every fucking scheme has a limit. America being the world's reserve currency is insulated from this risk because we can print our own currency and everybody actually wants it. It's not going to become monopoly money. There's not enough dollars to go around ever. But every scheme has its limits. 20 trillion fucking dollars of debt. Yeah. And so we printed a lot of our own currency in order to finance the COVID and the post-COVID and the Bidenomics and the $2 trillion Inflation Reduction Act. You guys remember that scam? And then now this big, beautiful bill scam from Trump. More debt. Now, what happens with this debt is that we have to pay the interest on it every single year, every single month. And if we can't print more money to do that, because we've already cooked the printing press, they raise taxes. The government doesn't have money. The government is not a thing. The government only has money because they take it from people. The government's broke. So it starts at zero every year. Budget, imaginary budget. Now, when the Democrats were in charge, it's like when the middle schooler says, I'll make all the drinks in the vending machine free. And they run on that for the middle school president. Yeah, they're going to fucking win. Who wouldn't want free stuff? But now there's an IOU. So you have to sacrifice every recess, for example, until you pay back all the free stuff from the vending machines. Now no kids get recess for like 10 years. Fucked it up. One class, one generation, one class decided we're going to do free stuff from the vending machine. Boom, they got a bunch of free stuff. Okay, you have to do hard labor to pay it back. And now for the next 10 years, no middle schoolers are getting recess because they all have to do labor every single recess in order to pay back the free vending machine cost that everybody had free pizza parties. Do you guys understand this analogy, for fuck's sake? I'm really trying to get this to stick. This is the crisis of our era. Now me, I'm going to be rich as a motherfucker when this shit hits the fan. I don't give a fuck. What about you, though? What about your kids? What about your family? Are you prepared? Do you have a life insurance policy? Do you have investments? Do you have a financial advice? Have you put money aside in equities? Probably not. So listen the fuck up. Okay. Got a little too excited. But this is real, people. This is not a fucking gimmick. Your future depends on paying attention to these big shifts. And these shifts are happening quicker than ever. The cycles are getting shorter and shorter. And I really want you guys to be involved. This is not the time to be sitting there lollygagging. This is the time to be taking advantage of these opportunities. Once in a lifetime Why is Warren Buffett sitting on $700 billion in cash? Why? Missing out on the greatest stock market boom in stock market history. Why? Why would the smartest investor in the world be missing out on the most high returning period in stock market history? Because something's coming. Rich people, wait. You have about 7 crises between now and the time that you guys hit the sack, between now and the time that this ride is over. And the only time you can really change your tax bracket, jump from one to the next, is during these crises. Never let a crisis go to waste. It's fucked up. But this is the way of the game. And if you're going to be Pollyannish about it, then you're never going to be able to take advantage. COVID took all my money, I gutted my 401k when I worked at Merrill Lynch as a financial advisor, as a wealth advisor, gutted my 401k, took all my trading money from FTMO, and I gutted the treasury account for chart addicts, like our corporate treasury account, gutted everything, put it all into crypto when the market crashed during COVID. Because I had fucked up in 2017, I had fucked up in 2019, and I was not going to fuck up again. This next crash that happens, y'all probably will never see me again. That's a lie. You guys know I'll always be around. Chart addicts, I'll be around. But anyways, pay attention. It's a very important period between now and the end of Trump's term, between now and the midterm elections, basically. All of the pieces on the board are going to shift. It's like hungry, hungry hippo. Now, you can be hungry, hungry hippo and just smash the thing, right? Or you can be the one playing chess while everybody else is playing Connect 4. While everyone's digging for gold, you could be selling shovels. Put a 1 in the chat. We're still on the same page. I'm going to go through 3 trade ideas after we finish this outlook, which, yes, we're still on the data releases for the week. Yes, we're still here. But we're going to go through the trade ideas. I'm going to see what the members said about which trade I should show you guys for free. And let's get ready to make some money this week. Okay. Williams is speaking on Tuesday as well. And then Waller is speaking at 10:30. Monetary policy and a global economy. Okay, cool. Dude, did I just go on a 20-minute tangent to shit on Japan and didn't even fucking look up the Japanese bond numbers? This is what ADHD looks like. Let's go to Tradeonomics. Let's see if we have the data set right here. Boom. Okay, so this is the Japanese 10-year bond yields. So the yield is the percentage return that you get on your investment. Okay. So if you're making back, if you give me $1,000 and I'm going to pay you back 1,050, that's 5% yield, 5% return on the money that you put in. So for you put $1,000 in, you're going to make $50 profit. Okay. And so the correlation or the relationship between yields and the price of the bonds, like when you go on the government website, which in case you guys don't know, if you're a US citizen, you can go directly to Treasury Direct, which is the government website to buy bonds. All right. And I'm not gonna do the whole fucking process, but let's just see auction results. Give me something. Why won't they just give me data? Anyways, the correlation is inverse. So bond prices and bond yields move opposite of each other. So if the government wants you to, like the government's broke. Okay, let's just say that you are a household, you guys need some quick cash. You know that you can issue these things in your neighborhood and everybody can kind of like you can raise some money and then you can just pay them back later once you're on your feet. So whenever the government needs to whip up some quick cash, they'll issue some bonds and they'll kind of change things up. Now, the higher the yield, the more attractive it is. So at some point, the long-term yields were like 5%, which means the government guaranteed through the power of the printing press and the Panzer fucking tanks that we have and the fucking Falcon 9s in the sky through the power of the US military will pay you back this fucking money. They will print this money out of thin air to give it back to you. Guaranteed 5%. Very attractive. And so the bond prices are typically very low. So you buy a lot more of them, people put in a lot more money. Now, when bond prices are high, you can't buy as many of them. And the yield is typically a little bit lower. So what we're seeing right now is that bond yields have been going up. This is kind of just a trend since, we'll call it since 2024. Let's zoom out real quick for the weekly. Okay, bond yields. This is for Japan, by the way. All right, massive crash in 2025. What is this, March? What the fuck happened in March? Oh, the Bank of Japan had some open market operations, market manipulation. Okay, sideways, big crash, retest. Okay, push up. We're at the 88.6. And we're going to be looking at bond yields maybe making a retest before continuing their journey up, which means that bond prices have been going down. They're trying to lower the price. Look, no one wants to buy your shitty car on Facebook Marketplace. You keep dropping the price until some schmuck buys it. Japan, they're going to keep dropping the price of their bonds until some schmuck buys it or until it's more attractive than whatever the fuck the rest of the world is selling. I don't want bond rates. I want bond prices. Why is it yield data, dude? What is going on here? Let's go Japan bond prices. How is there no results for this? Outright purchases of Japanese bonds. So they've been buying their own bonds. This is kind of what we're seeing here in 2025. Not a very responsible move, money supply. Give me 1 second, guys. Let me look through this. Previous versus current. Adding 100 billion yen, not a big deal on a monthly basis. Okay, anyways, to end this fucking tangent, okay, to get back on this train of thought, it's a pretty busy week. All of these Fed speakers I was expecting them to say something about our country, but no. They want to go talk about the sinking ship over there. Oh, guys, look, it's a dumpster fire. Every fucking Fed president, Kashkari himself, you're getting on every Bank of Japan Policy Institute, whatever. They're cooked. Let me save you guys some time. Let me get up on the panel. Hey, what's up, everybody? Oh, esteemed guests and everybody. They're cooked. Thank you. Lunch is at 3. Cooked. Japan. Shit out of luck. Let me save you guys some time. Roy, you're being hyperbolic. Obviously, Roy, you're playing this up. You're playing a character. Roy, it's a live stream. You don't actually mean that. Japan's not actually cooked. Yo, in the next 3 to 4 years, the fiat currency of Japan will have completely gone to fucking dust. And you'll look back and be like, dude, that crazy son of a bitch from those live streams was right. Wow, every economist and PhDs and the Fed themselves and every central bank was wrong. And this monkey on the goddamn live streams was right. And now I hope you guys come back and fucking give me my flowers when that plays out. Just saying. Bitcoin will be 1 million next 7 years. Come back, say thank you. That's it. That's all I'm asking. All right, FOMC meeting minutes drop on Wednesday. We have preliminary GDP. GDP released 3 different segments. Preliminary GDP. Then there's preliminary GDP. It's the revised GDP, the second one. I'm blanking on it. And then there's the final GDP number. We have unemployment claims. Dude, why is every Fed? What the hell is Goolsbee talking about? The Mackinac Policy Conference in Detroit. Okay, at least it's not another fucking Japan conference. Okay, Kugler speaking, Daly speaking, and Logan is speaking. These are all Fed presidents. Annual Federal Reserve Board Macro Finance Workshop. Okay, sounds good. That sounds like something worth tuning into. We'll be on that. At an event in Texas. A very specific Forex Factory. Thank you. Sus. Jail. I don't know. Fed speakers should probably, I mean, look, the Fed president should go back to the fucking banks and fix the banking crisis and fix the economy. I don't like this whole media tour that they're doing. You're not Taylor Swift. You're not dropping a book. You're not Michelle Obama. You're not dropping a new book. Get the fuck back into the you know what I'm saying? We're economists. Go economize, God damn it. Sitting there trying to fucking be a celeb. You're not Joe Rogan. Japan, they're cooked. Saved you some time. What about the bank term funding program, the BTFP? How much money did we print when we were supposed to be doing quantitative tightening? Just completely undid all of the progress. How about that? How about the swap lines? Right? What about that? No. They're trying to undo Dodd-Frank. Any updates on that deregulation? No. Japan Policy Institute. Right. 50 PhDs on stage. Oh, what's going to happen? I'll save you some time. Cooked. Japan. Cooked. Sorry. I love you guys. Konnichiwa. It's fucked up. I don't like it. I'm Lebanese. We've had the worst hyperinflation crisis in all of history. Our banking system is completely cooked. I'm saying this not from some moral righteousness place, from holier than thou standing. I'm saying this from the trenches, goddammit. The Lebanese lira, cooked. So I don't know why we're going to sit here and spend a whole week doing 50 different conferences just to sit here and debate a point that's already case and closed. Call me and I will give you the answers. Federal Reserve, Jerome Powell. I'll give you the answers. Matter of fact, I'll do it for free. Here's a freebie. Consider this my resume. Japan's cooked. How about we go ahead and focus on Great Britain? All right. Europe, cooked. It's like putting your money in a blender, and not a good one. It's not going to like fully rip it all up like to where it looks cool. It's just going to be fucking a brutal. It's a dull blade on the blender, and there's money in and it's creasing it, and now it's like kind of ripping it. Just rip it already, No, Europe shithole. Anyways, and that's no disrespect to Europeans. You guys know I love you guys as people. Some of you, maybe. Depends on where you're from. But the governments and especially the central banks, number one of Japan and then of Europe, this constant middle school mindset of offering too much free shit, not being able to finance it, and not having an idea or a plan to finance it, which is, by the way, is my number one criticism of Trump's big, beautiful bill. He's not exempt from this. Nobody is exempt from getting cooked when they're fucking up. Trump, number one example. All these tax cuts, like otherwise we're going to deal with a massive tax increase. All these tax cuts are incredible. No tax on tips. No tax on overtime. I love it. No tax on Social Security. Amen. Hallelujah. Who's going to pay for it? For fuck's sake. We're not Democrats. No, I'm not specifically. Not to say that, you know, whatever political affiliation you have. But Democrats always, will finance it later. Just free stuff. The question never comes up, who's going to pay for this? These tax cuts, there is no plan to finance these. So we're going to print more money to finance the deficit just to be able to make the interest payments on the debt. We're going to exacerbate the deficit. We're going to exacerbate the total debt. And we're back to square one. Except now the budget's even bigger than it was before. And we just added $300 billion to the defense budget. So, dude, our next 10, 15 years, if you're not rich and you don't own assets, you're going to be fucked because the price of everything is going to be so fucked. And your paycheck is not, your salary is not going to go up more than 20%, 10%, but prices are going to double. So your grocery bills double, but your job paid you 10% more. Your salary went from 50K to 52K. Awesome. Your grocery bill went from 100 to 300. It's your raise is not going to cover it. So if you own assets, your house went from 300K to 700K. You're rich by default, by participation, right? You're rich by association, goddammit, just by owning assets. People, heed this as a warning. This is not financial advice. Do your own financial research. But shit is changing. Money is changing hands in real time. It's right in front of you. If you sleep at the wheel during this period right now, you're going to regret it later. 2020 came by, some folks regretted it. 2022 came by, people weren't ready. 2017 was around, all my friends in college were fucking off, not paying attention to the cryptos. How many more of these cycles are going to come and go before you take advantage and change your family's life? You tell me. Okay, I'll give you guys a freebie here. Actually, I'll give you guys all the trades. If you care enough to pay attention, you'll rewind this on the live stream and figure this out. So, previous area of structure. If we look at just kind of the structure that NASDAQ is building, I'll remove all the drawings. Here's the previous accumulation zone. We had a beautiful mark up. Here's an area of reaccumulation right here. And now we have distribution. The market is liquidating all of the buy orders, all the bids that were bid up. So we have this markup, we have this reaccumulation right here. Market retested the reaccumulation zone, creating a higher low. However, we're on the 4-hour here. Look at the reaccumulation zone right here. Let's draw a line. So we have a wick. And on the smaller time frame, the body is a little bit lower and structure is still holding. But on this time frame, the body of the candle closes under the previous low. Just slightly, but it counts. It matters. Showing that sellers were willing to bid the price lower than this previous support level. Okay, so we could see a move to the downside. Here's 3 trade ideas for this week. We're going to get a retest, double bottom of this buy. So we still are forming these higher floors. And then ever since we got in this distribution phase, we've started to create a wedge. The wedge meaning that we have lower lows, but we also have higher highs. So highs are getting higher, lows are getting lower. What typically happens is in this kind of expanding wedge formation, you either have a fake to the upside and a crash, which members, you guys know we have the 88 sitting right here. Or you have a fake to the downside and markup. But whatever's in the channel, this thing's about to get violated. If you're planning on trading this, you're like, oh, next time it hits the channel, I'm going to be in. It's going to get to the bottom of this channel, swoop all the way through, and then continue. So here's the 3 trades. Double bottom buys, you're welcome. Once the market gets to the top of this weekly range from last week, there's a sell right here. Okay, double top. I'm going to kind of simplify it here so I don't give away too much sauce, but double top, 88.6 fib for the folks who have taken the master class. There is a daily Fibonacci sitting right above this zone. This is the big kahuna right here. All right, we'll go to the daily time frame. And I'll just give you guys a hint here, a little cheat code. Top to bottom, draw your fib. Okay. The sell zone is sitting right there. We're sitting right under liquidity. Okay. So daily zone, market consolidates. We have our heartbeat pattern, whether it's a model 1 or a model 2. And that's usually going to be the big move, the big trending move. And that's what we're planning on seeing this week. Okay. So trade 1 is a buys, trade 2 is the sells, trade 3 is the massive sells. And once we make it back to the bottom of this accumulation zone, we have another buy right here. Hallelujah. All right, everybody. We clear on this? I know I went through that a bit fast for the members. We're going to obviously go through it in detail. I'll send my markups in our private Discord chat. More incentive for you guys on YouTube to sign up. Click the link in the description. Take it easy, guys. Happy and safe trading this week. I'll see you bright and early tomorrow, Memorial Day. Gosh darn it. Believe in yourself. Tell somebody that you love them before you go to sleep. It'll make you feel better about yourself. And your trading success will only ever grow to your limits of personal development. If you want to succeed as a trader, you want to improve as a trader, get better as a person. All right? Figure out how to be more patient. Work on your personality, work on your temperament, work on your weak spots, work on your strong suits, work on your creativeness, expression. If you're not expressing yourself, the opposite of expression is depression. You don't have a way to express yourself, writing, music, live streams, trade, some way it'll self-destruct into your trading. So you want to get better, be better,